State Farm announced this week it won't be writing new homeowners policies in California, citing the rise in costs to do business here. But what does that really mean for the marketplace and people looking for coverage? KCAL News on your side reporter Christine Lazar joins us with some answers. This sounds kind of
well, it's
unnerving.
not good news for people looking for policies, right? Because whenever you have one of these major insurers stop writing new policies, there's less competition in the marketplace, less choice. In theory, prices can go up, and that's exactly what's happening. Now, the top 25 insurers in California, they're either scaling back or refusing to write new homeowners policies entirely. Most notably, as Amy mentioned, State Farm, which was the most popular insurer in California. And we just learned that Allstate Insurance has also paused new homeowners policies. Now, experts say this will have a ripple effect on the market and consumers. Wildfires, rising construction costs, and inflation, all factors as State Farm is no longer writing new homeowners policies in California. And that could make things challenging for those looking for coverage.
People are buying homes and they're used to being able to get a handful of quotes and find the best one.
Insurance broker Carl Sussman says now homeowners are lucky to find adequate and affordable coverage. When he looks for quotes,
there might be zero, there might be one or two, and they're significantly more expensive because, as you can imagine, when there's less companies offering coverage, there's less competition. And then you end up with the carrier that charges higher rates.
Here in California, the Department of Insurance is very consumer friendly, and all rate hikes must be approved. Sussman says the cost of doing business in California has outpaced the amount most insurers can take in. But Amy Bach with the nonprofit consumer group United Policyholders disputes that.
State Farm has gotten 5, I think, successive rate increases in the last, 6 years. They have said this is a business decision. We've got enough wildfire risk exposure in California. We don't feel it's safe to take on anymore.
Bach says she expects State Farm will return to the marketplace in a year or two. And she says this isn't just a California problem.
It's a sign of the times in the home insurance market, not just in California, but in all states that have disasters, have been having disasters. We're seeing prices going up, competition shrinking, insurance companies pulling back.
The Department of Insurance issued a statement to KCAL News saying in part, insurance companies' solution will always be raising costs for consumers. We are focused on the safety of our homes and communities. Our experts on rate regulation closely scrutinize insurers' pricing strategies to make sure consumers are not paying more than necessary for their coverage. In the meantime, Sussman says those struggling to find affordable coverage should work with an independent broker who will have the most options available. And you can always change insurers once the market stabilizes and prices come down. And it's very important to note that both State Farm and Allstate are still writing new auto policies in California, and their announcements will not affect people who already are their customers. It's just new policies, which brings me to my next point. Make sure you're on auto pay if you aren't already for your coverage, because if you forget to make a payment and you lapse, you will either lose your coverage if it's like Allstate or State Farm, or they're going to say to you, well, now you're going to pay a lot more because the premiums are going up. So you want to make sure you're on auto pay so you can stay locked into that good coverage.
Well, we were talking during the break that we also need to make sure we have enough insurance because prices have gone up so much. So you need to make sure you have enough coverage.
Yes, because one of the things that these insurance companies are listing for why they're pulling out is because the cost of construction has gone up so much, especially here in California. So if you got your policy, years ago, even back in 2019, you're not going to be able to build the same house that you could then if it burns down as you can now. So make sure, talk to your broker, make sure you're fully covered, make sure you're on auto pay so that when you're locked in, just like you're locked into a 3% rate on your mortgage, you don't want to suddenly go up to 6-7%, which is what we're seeing now. You want to stay in that. Same thing with your homeowner's policy, because the agent I was talking to said he has some people in fire areas where they were paying $8,000-9,000 a year for their premiums. Now some can be paying $40,000.
Oh my goodness.
So you don't want to lose that lower rate if you have it.
No, you sure don't. All right, Christine, thanks so much.